Welcome back. Tech stocks dominating 2024, heading for a second straight year with double-digit gains. And our next guest is betting on even more upside for some of the group's biggest winners. Joining me now, BakerAvenue Chief Strategist King Lip. And King, it's great to have you on here. I have to tell you, though, it's been a parade of investors coming on here and saying, you know, big tech has had its moment. It's really time for money to rotate into other themes, smaller stocks, things that aren't so popular. It seems like you're not on board with that idea.
Yeah, Mike, it's great to be with you. Yeah, we'll take the other side of that trade. And the reason why is, let's just say the recent weakness that we've seen in the tech sector. We think a lot of that just has to do with rebalancing. We don't see any fundamental reasons necessarily. We see it as more technical in nature. We think cash would go back to these winners simply because that's where the earnings growth is in 2025. If you look at the tech sector, it's still looking to be the highest sector for earnings growth with over 20% expected in 2025.
Right, although I guess the argument is that the rest of the market is also going to have a big catch-up move in earnings. And I guess maybe it's true that this is mostly technical or repositioning and nothing much has changed. But once you get these very large stocks up to 32, 35 times forward earnings, maybe that's kind of enough reason for people to reassess.
It could be, and we're not bearish on the other, call it 493 names either. We're expecting them to deliver somewhere around 13% earnings growth in 2025, but that's still, going to be below that of what the tech sector is expected to deliver. Having said that, we don't think valuation is out of line. In fact, if you look at call it the Magnificent Seven stocks, their valuations are within one standard deviation of their historical norms in the last 10 years. So it's hard to say that they're at levels that are not sustainable. In fact, if you go back to a lot of these companies, going back to their IPOs, it's not unusual to see these companies deliver multi-year strong gains, simply because that's where the earnings growth is.
Well, no, there's no doubt about it. I mean, almost across any time period, just the NASDAQ 100 has been a remarkable source of returns. Most interested in some of your specific plays, and especially ones where you're essentially doubling down on an already great year, like a Broadcom. Feels like that was a story everybody embraced recently, had a huge gain in market cap. Why can it keep working?
Well, first of all, it's a wonderful company managed extremely well by Mr. Hock Tan. I think Broadcom is an interesting name just because it does something that Nvidia doesn't do, which is custom AI chips for their customers. This segment is growing just as fast as Nvidia is, and the company itself actually has a lower multiple than Nvidia. Companies like Palantir also look interesting to us. It's controversial because it sells at a very high multiple. We recognize that. But the company just became profitable just 2 years ago, but it's been cash flow positive. We think it's uniquely positioned in the incoming administration. Peter Thiel was a founder of Palantir, obviously a connection with Elon Musk there. And with the Doji efforts that are coming in to reduce government expenditures, we think Palantir is really uniquely positioned.
I mean, clearly that is the collective conclusion of the market, that Palantir is in some kind of a privileged position that's gone vertical since the election. You mentioned the valuation issues. I mean, it's above 50 times revenue at this point. There's been lots of, top insiders selling shares into this ramp. I mean, why doesn't any of that give you pause at this point?
We'll be hesitant in terms of being buyers today. If it does pull back, say, to the mid-60s, it would be a lot more attractive to us. But given how volatile these stocks can trade, we think the opportunity is there for investors to participate in a name that's going to be, in our view, a big winner going forward. And also keep in mind, if you look at past winners in terms of multi-baggers, if you would, a lot of these names have sold at tremendous high PEs before they had their big runs. So I think sometimes the market underestimates the earnings growth of what these companies can potentially reward investors with.
Yeah, I mean, clearly that's what a buyer around these levels would be betting on. Talk a little bit about Nvidia. I mean, you mentioned why Broadcom might have certain advantages, but Nvidia has been a very fascinating case because it built up all these massive gains in the first half of this year, and it's basically held on to those levels, but it has not been able to make further progress. What do you think's behind that?
I think a lot of that is just about expectations. If you look at multiples, Nvidia, again, now sells for roughly average forward PEs of the last 10 years. I think investors are sort of looking, waiting and seeing how the next earnings report will look like. We expect the company to continue to grow, just not at the rate that we've seen the last 2 years. So I think investors are kind of this wait and see period for Nvidia.
Yeah, I've been waiting for a few months. We'll see if there are catalysts on the way. King, great to catch up with you. Thanks very much. Appreciate it.